Hello traders, and welcome to lesson number 9 in the ReadFX Beginners Forex Trading course. In this lesson then, we're going to look at chart types. Traders use different types of charts to display the price of an instrument and other important information. Now, the most commonly used chart types are line, bar and candlesticks. There are some other chart types as well which are not as commonly used and are normally used with specific strategies. So they include Renko charts and Heikin-Ashi. So we're going to go to TradingView now and have a look at some of these. Okay, so here we are in TradingView and we're on a 1 hour chart looking at the Euro US dollar. Now this is a candle chart and I'm just going to quickly change it by clicking up here to a line chart. Now you can see immediately that the line chart has stripped away a lot of the information. We don't have these big wicks. We no longer have two colors, so we can't see if price has gone up or down within a period. But what we can see, this is actually showing us the close price. If I just click on this line and right click and go to settings, you can see here the price source. Now I can change this if I want. It's currently showing us the close price as a line. If I click on low, you'll see that the line moves slightly. And what it's doing now is it's using a different price to draw this line. So I'm going to set it back to close because in my opinion, that's the best information to display. So as I mentioned, it's stripped away wicks and bodies and other bits of information like the open, high, low and the close. We can now only see the close price. And what this does, if I zoom out, it allows you to see the real price that price is actually reacting at with all the wicks stripped away. So if I just change this to a cross, and you can see now it's very easy to detect the actual prices or the actual price that the chart is responding to. So I use this to draw support and resistance rather than using a candle chart, because with a candle chart you're never sure whether or not to put your line on the wick or the body or the close, and there's lots of arguments around that. So this really simplifies it. Right, if we go to a candle chart then, so candle charts are the most commonly used, and you'll notice that mine is black and grey. I don't use green and red because it's ugly, and there's also an argument for people not using red candles. Apparently, psychologically, if you see candles that are going down and the red, it's scary and people make mistakes. I don't personally believe that. I never had a problem with it, but a lot of people don't use red candles for that reason. I just like black and white or black and grey because it's easier on my eyes and I spend a lot of time looking at charts. So a candle chart then gives us 4 pieces of information, and you can see up here we have OHLC, which is open, high, low and close, and you'll remember this from the earlier lesson when we looked at what candlesticks are and how they work. Now candlesticks are very useful because they produce candle patterns, and you can have a 1 candle pattern, a 2 candle pattern, a 10 candle pattern, it doesn't matter. But each candle gives you information by its size, its shape, its colour and its location on the chart. So candlestick charts are by far the most commonly used type of chart by traders. There is a variation on this called bars, and it shows you essentially the same stuff. And what you can see is you have these little lines poking out the sides, and this is for the same information, OHLC. So you have the open and the close, and then your wicks are the same. That is your high and your low. All they've done is remove the body. I don't know why, but my eyes just can't follow this. Just the way they go together, I just struggle to understand what's going on. So that's the 3 basic chart types. Okay, so we have bars, candles, and line. Now down here we have some additional ones, and there are actually more than this. There's quite a lot more. Now these are custom chart types. Some popular ones are Heikin-Ashi, and you can see these look similar to candles, but the data is now displayed differently, and you can see straight away it's a different way of presenting that same information. Okay, I've just changed the instrument to the US 30 because for some reason my TradingView is showing no data for the Euro US dollar, which I don't believe. It's the most traded instrument in Forex. Anyway, this is an example of a Renko chart. Now Renko charts don't have a time element to them. It's just based on how far, or rather each brick is based on a set distance. So if the price moves a set distance, it adds another brick, and it creates these really crazy looking charts. And a lot of the strategies used with Renko revolve around counting bricks. So if you see so many green ones, then you sell, or if you see so many red ones, then you buy, and it's that sort of thing. So these are Renko charts, and again, I don't really use these. I've tried strategies that rely on Renko, and I've not had great results with them. So I prefer to use candlestick charts, and that's because it gives me all the information I need in a way that's really easy to understand. Okay, so in this video we've covered line charts, bar charts and candlestick charts. In the next lesson we're going to look at order types.